Going live in 5 seconds, huh? Sorry.
Okay, let's do it.
Good to go. Okay. A very good afternoon to all of you. I hope everyone can hear me loud and clear. Um, so let's begin. As you all are aware, our Honorable Prime Minister announced 16 Jan, the founding day of Startup India, as the National Startup Day. To celebrate this momentous day, DPIIT, or the Department for Promotion of Industry and Internal Trade, has been organizing the Startup India Innovation Week 2024 from 9th to the 16th of Jan. I would like to take this moment to welcome you all to day three for yet another interesting session to help you in your journey from idea to enterprise by perfecting your pitch to investors. I am Ronak Jaisinghani from the Startup India team, and today we have with us Shauraya Bhutani, co-founder at Capital Connect Advisors, one of the most active tech-focused boutique investment banks, providing corporate finance, portfolio management, and ecosystem services to leading tech founders and investors in Asia. Shaurya also is a partner at Breathe Capital, a micro VC backed by select family offices, investing in cutting edge seed and Series A technology startups. He is currently based out of Singapore in New Delhi and operates at the epicenter of tech investment and advisory across two of the world's largest growth markets, Southeast Asia and India. Shaurya has built extensive deal experience, network, and industry expertise, working with over 100 technology companies across retail, fintech, edtech, digital media, health tech, software, and IoT, amongst others. Importantly, Shaurya was named in the Forbes 30 Under 30 Asia list last year. Finally, and perhaps most importantly, Shaurya is a dear friend from school, and we practically grew up together. Welcome, Shaurya. How's it going?
Thanks, Ronak. Very happy to be here, and congratulations to you and the Startup India team for setting up such a wonderful event. It's day three, but I've been following day one and day two. It's been really, really insightful. So thank you to you and the Startup India team.
Thanks, Shaurya. So, without wasting any time, let's get right into it. Uh, so, Shaurya, to begin with, can you tell our viewers a little bit about yourself and your experience with startup investing in general? Sorry, very macro question, but just to begin with, want to set some
Yeah, sure. I
context for
mean,
everybody.
you gave a pretty extensive intro, but I'll try to cover off a little bit and keep it short. So effectively, for the past 8 years, been working side by side with tech founders in Singapore, in India, rest of Southeast Asia, on all things related capital. So when a founder wants to sell their companies, we come and help them through M&A. When they want to raise capital, we help them connect with investors, build their pitches, and effectively be by their side as they grow their companies. More recently, we've started investing directly in companies as well from a VC vehicle, which is called Breathe Capital. And very excited to see where the Indian ecosystem goes. We're very, very bullish about India in general. So that's the long and short of it.
Thank you. Quick question: an average ticket size for the fund?
So it really varies. Ronak, we're still kind of building our thesis. So we usually go seed or series A, and we're okay to lead the round. Quite flexible when it comes to the check size. We can go in directly and put a small check and then lead with a larger check later. So up to 500K or $1 million US.
Fantastic. Sounds good. Great. So, considering today's session is on perfecting your pitch, let's get started with what, in your opinion, are some of the key elements that you think make a startup pitch something that would sort of stick with an investor, something that he takes back with him.
Yeah, I mean, there's so many elements, right, which need to come together. And I also wonder if there's anything known as the perfect pitch, because it really varies from investor to investor. A perfect pitch for investor A could not be so perfect for investor B, right? So I would not advise on how to make your pitch perfect, but rather I would like to give some pointers on what to do. What are the basic things you should do so your pitch is memorable, right? and sticks with investors.
Mm.
You'd be surprised. I mean, it's the most simple things go a long way, right? Even as so, let's talk about two or three things, which are the most basic things, right? Say number one, um, when you start, be on time. don't don't make them wait. When you're starting out, set the agenda. Say what you're going to talk about, and in which sequence you're going to talk about it. Um, ask the ask the investors if they want to speak or focus on a certain topic over any other topic, and if they want to skip any topic, right? So just setting the agenda up front just gives builds a lot of comfort in the beginning. um, then move on to introduce your team fully. Do not forget about your team if your team's on the call. So these are very basic things, right? And while say you're presenting, don't go on a endless monologue. You'd be surprised, how many founders are just having a one-sided discussion. So I would
Got it. Yeah.
suggest that now and then, wait, ask questions. Are you following? Do you have any, do you have any questions? Keep
Make it
the
more conversational.
so keep it as a discussion, because the more engagement from the other side, the more
Yeah.
memorable the pitch is, right? So these are some of the things, and I would probably end at also to keep it, you know. So one of the ways to keep it crisp is assign two or three key messaging points to each section or slide. Deliver that, right? And then move on. Do not linger. Keep it crisp. So these are some of the tips or very simple things. If you get right, you'll go a long way.
No, of course, no. Very honestly, fantastic. I think these are things that people tend to sort of overlook, and because they take it for granted that these are things that they won't really mess up. But I think at an early stage, at an angel or a pre-seed or the stage that you're funding, I think these things are key in terms of setting yourself up for the future, for future
Yeah,
rounds as well.
yeah.
Um, cool. So perfect. I think that's very insightful. Now, moving on. Why don't you tell us about what you think is the ideal structure? I know you mentioned that every investor, you can't really have a perfect pitch for all of them. Everything needs to be tailor-made for each and every single investor. Tell us what you think would be, sorry, uh, tell us what you think would be sort of an ideal structure for a startup pitch presentation in terms of, I'm talking about in terms of the order, and how important do you think it is for you to tailor your pitch to the specific investor or venture capital firm?
Yeah, let me answer the second question first, and I'll move on to the structure.
Feel free, of
I
course.
think from a tailor your pitch perspective, I think what is absolutely essential is to do your homework, right? Research the portfolio of the investor who you're speaking to. Research, scour the internet to see any announcements, any news about them. What are their partners saying in terms of where is their focus going to be for the year? What are the drivers? What are the motivations? And Ronak, now that given there is so much types of media out there, you'll most likely find a podcast where a VC partner is talking, having a very long conversation and sharing very deep insights about their thesis,
Their
right?
own end thesis,
These
correct? Yeah.
podcasts, spend the time, understand, and with this comes with the caveat that not I will never recommend a startup to change their business plan to suit a VC's thesis, right? Because it often, whoever does that, it is quite short-sighted, and will often get caught out, because if when you're faced with a second or a third or the fourth layer of questioning, it falls flat. So do not change your business plan, but rather understand where the focus is and see where the synergy is to your business, right? So tell your story from their lens. Do not change your story. But to understand their lens, you have to do the research.
Correct. No, that's actually interesting. So,
And I'll
I
answer.
mean,
Yes, sorry,
sure.
go ahead.
Yeah. Okay, so I was just no, I was just sort of interjecting and trying to say that no, that's pretty insightful again, because I think that because Startup India, as I'm sure you're aware, we cater to aspiring entrepreneurs as compared to startups that have sort of seen growth in their journey from idea to enterprise. So I feel a lot of people on this call today who are actually here to perfect their pitch. I think uh, a lot of them I have seen in my time over here would go to any length to, secure the bag of sorts. So they would, I have seen that, many entrepreneurs have come and they've told me personally that, this investor wants a pitch to be like this, and we have redrafted our entire presentation. So it's very interesting how you mentioned that, today you should not change your pitch just to suit the investor need, but actually create it using them as a lens in terms of what they want. So yeah, I think
Yeah,
that makes sense.
absolutely. I think when you say secure the bag, it's securing the right bag, right? And
Right.
the North Star is not getting funding. The North Star is building a company which sustains through the periods and eventually, lists on the Indian Stock Exchange or you sell it.
Hmm.
And just getting funding does not guarantee it. In a scenario where you're able to raise lesser than you wanted to raise, but have the right investor and the right partner on board,
Right.
um, you know, that is the preference, right? Um, yeah.
Yeah. Yeah. So there was a second part to the question. So which was sort of the first part, the
Yes,
structure. If yeah, yeah.
a very very long topic. I mean, I think we can run a few workshops on this, but I'll try to cover it off in a very
Which
short
we will do
period.
probably
Um,
following up to the. We will do that soon
yeah,
enough to.
yeah, no,
Hmm.
looking forward to it. So in terms of the structure, I guess again to my previous point, keep it very tight, right? No presentation should be more than 30 minutes or 45 minutes if there's a lot of questions involved, right? Because attention spans are limited and you've got to keep everyone engaged. In terms of the flow of the presentation, so we've typically seen the pitches which do well are usually top down, right? Which
Right.
start with why in terms of why in this current market context is your business model going to work over others, right? Why is your idea, why do this in the first place? Then it goes to what is it in terms of what is your business model, what are the features of your product, say, right? And then is the how in terms of how will you execute this? What is your go-to-market strategy, right? And sometimes right after that, we've also seen, and which paints the bigger picture, is what if everything you say went right? Where will you be in 5 to 10 years, right? In terms of your business. So go into the details and then sell the bigger picture. And typically we end with who is going to do this in terms of other people who are best suited or why are they best suited to execute, right? So the management team, whether it's the founders, if you're a series A company, it's mostly the founding team. But if you're a Series B company, then it's the broader set of senior management which you've assembled together. Why are they uniquely suited to execute and win in their market?
Got it. No, I do have a follow-up question on this too. I think that was going to be my next question on the one after that about exactly who should it be? Is it mandatory for, just the founding team to present? But I mean, when we come to that.
Sure.
Um, so yeah, so yeah, so the next one again is something interesting and something I personally have been very curious about as well. What do you think is the best way for a startup to sort of effectively communicate its USP? I know you mentioned the structure, and after telling the investor about the why, you talk about the what. So, what do you think is the best way to communicate the what? And what are some of the strategies that aspiring entrepreneurs on the call today can use to differentiate their startups from competitors in their space?
Yeah, I mean, so varied across business models. Some win on execution, some win on idea, some win on their technology. But I
Right.
think what's common across is when you're pitching to investors as a founder, your ability to demonstrate that you have a unique understanding of your market, which you gain through years of experience, which presents a competitive barrier for the others to get. I think one of the top things we look at when we invest or decide to take on a company for our advisory practice is, are these founders, do they understand the market in a very unique manner, and that is the instant competitive barrier or unique selling proposition, like you said, right, versus some of their competitors. So deep domain expertise is always preferred, but we also understand that this always can't be the case, because if you're, early on in your work life journey, then you do not have those experiences. But sometimes you can, substitute that with the speed of execution.
No, makes sense. Great, thanks for that. Now, yes, coming back to the question that I had, and you briefly touched upon, but if I can request you to sort of elaborate a little bit on this. So, Shaurya, talking about the team, who do you think, who in your opinion should be presenting the idea to investors? And does it always necessarily have to be the founding team? Or do you think if, let's say, for example, somebody in the senior might be possibly a better storyteller, might do justice to the pitch? And
Yeah,
there is a second part to it, but it's a longer question. So maybe I'll let you answer first and then move on to the second part of it. So,
a very
yeah.
good question, and often a topic which we discuss with founders. So, I mean, again, depends on the stage, right? So, if you're a pre-series A company or Series A company, um, you cannot replace the founders. The founders have to pitch.
Sorry,
Um,
Shaurya, can you mention the stages again for when the
if
founders
you're
aren't really.
anywhere, starting from your first round, which is angel pre-seed up to Series A,
Hmm,
the founders have to, present. From
hmm,
our perspective, there have to be exceptional circumstances for them not to present. And there's a
hmm,
couple of reasons why, right? The main reason is that when you're investing in that early stage, startup business models evolve early on quite a bit, pivot and evolve quite a bit. So you're effectively, as an investor, as a seed investor, say, investing in the founder, right? Investing
correct.
in
Yeah,
their knowledge, their experience. And if the founder is not there to pitch, that's, a big red flag.
right.
Although, if
Correct.
sometimes you do have the privilege of having more than one founder, so if you have a founding team of two, three, four, co-founders together, then it
Right.
becomes a judgment call in terms of who is the better storyteller, like you said, right? Who can sell?
Hmm,
Because some
hmm.
people are built to sell, some people are built to execute, but sometimes you get a combination of both, right?
Of
So
course.
that can happen within the founding team. Once the startup becomes, more mature, Series B, C, you get senior people on board. You have a CFO, COO, etc. It is very
Hmm,
much accepted that a CFO will run through the financial figures, the metrics, and that's okay. A non-founder CFO, right? But
correct.
that's slightly in the more mature stage.
Yeah. It is not a deterrent for an investor to actually see, maybe let's say during a series B or a series C pitch, to see maybe like a co-founder who's joined probably towards the latter stages of the company formation to come and present and talk about the startup's journey. Or
Yeah, absolutely not. It actually flips, Ronak, after a point, because if you're a large enough, say, Series B company, you have 100, 200 plus people on board, right?
hmm,
What you're looking at is effectively, why is the founder part of every call and why is he doing everything, right? Then the founder's role becomes around, have they built a good team around them to do certain things?
right. Okay, that makes sense. Perfect. Thanks. I really needed an answer to that myself. I've always wondered that, why do we see different people present? And sometimes when even shows like, of course, now we've seen Shark Tank, we've seen how it's not always the founder who's actually presenting, but it has actually been pointed out by some of the judges at times that it might be somebody else on the team who's actually a better storyteller who should have or who would have done justice to the entire pitch. So thanks for validating that, Shora.
Well,
Um,
I mean, I think Shark Tank's a different format, right? I mean, it's
right, of course.
of
Yeah,
course we don't know what happens in the background, but
of
um,
mm.
that's a very exceptional, and that's not standard practice way of pitching
As a
anyway. So
benchmark. No, 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 no. Taking that as just an example, but of course, in the broader scheme of things, I'm sure
uh,
things are a lot different. Um, Yep. So yeah, so the second part of the same question, Shora, what do you think are some of the most important qualities that an investor looks forward to in a startup team during the pitch? Not just the founder, but the overall team.
Um, well, I mean, it just goes to what we discussed earlier, right? I mean, does the founder have domain expertise in a manner which is, they understand the industry in and out, uh, and they've found the gap or they found a piece which has not been filled yet, right? And they come with that insight to factor in. So early on, it's a bet on the founder. And then if you're building a co-founding team, then it's around are these complementary skill sets you've got together, right? That someone can sell, someone can execute what we spoke about. If you
Right.
have, CFO, they understand how finances work, what metrics are important, what metrics to track. Because often, if that's not the case, I mean, I think very undervalued a skill set is a CFO skill set in a startup because
Hmm.
although it seems like the boring part and all of that, it really is the one which is a guiding light in a way, right? What are the metrics you should track? Why are these metrics important? Because you don't often companies go in the wrong direction because they aren't following the right or building towards the right metrics, and we've seen that often enough, right? And more so now, I guess, because of the funding winter, it's how to
Right.
manage your finances.
I think now they're getting the deserved attention that, was missing for the last few years when capital was free flowing in the ecosystem. But yeah, shout out to all the finance majors here looking to become future CFOs.
Or the
Um,
CAs or the CFAs.
oh yeah,
Best
of
of luck.
course, all the CFOs, of course, best of luck. Um, so yeah, moving on, Shorel, the last two questions for the day. This one is about follow-ups post the investor meet. Any advice on what is the best way to follow up with an investor? Again, a second part to it. I'm going to wait for you to answer this to move on to the next.
Yeah, I mean it's all
Sorry,
connected
sorry,
to.
sorry to interrupt, but can you share what for you would have been the best way, and then what do you think the general consensus is for investors across?
Yeah, I mean, I can only speak from my perspective, and I think it's also when we speak with some of our co-investors and other VCs, they are also quite aligned, right? So the consensus might be the same as what we look out for. Um,
Hmm.
and it
Okay.
goes back to my point. Like, if you can keep your pitch tight and crisp, if you can finish within 30 to say 45 minutes, you have that last say 15, 20 minutes to ask pertinent questions, right? Now you have time to ask the questions rather than answer the questions, and these are some of the qualifying questions to ask. What does your evaluation process look like? Right? What is your timeline? Um, do you need more information? What has not been provided in the pitch? When can we expect to hear back on next steps, etc.? Now, you wouldn't have been able to ask these questions if you were trying to, say everything, and at the last moment they're like, "Hey, we got to jump to another call," right? So when you ask these questions, what is your timeline? What is your process? Um, what is the next step, and when can we expect to hear back? Then you can base the follow up on their process, right? Instead of just pinging randomly and saying, okay, what's the next step, etc. Right? So I think please allow yourself enough time to ask questions, because it is actually very much appreciated to turn the tables and ask, right? Why are you a good fit, which is not related to this, but yeah. So I think it's very important.
Okay, allowing yourself time to make sure to get all the relevant questions answered. Noted. Chora, second part to that, the same question. Is there something that investors prefer as compared to what might be common practice today? I mean, again, from your personal experience, anything that you've seen and anything that you prefer?
Yeah, I mean, to the extent that you can build a personal rapport over the first pitch, potentially a lot of people now. I mean, half of the
Correct. Yeah.
business, more than half of the business is conducted over WhatsApp, right?
Right.
So to the extent you can build a personal rapport, ask them for a coffee, follow up, just to talk about the sector. Drop in, get their WhatsApp number, and just in a very no strings attached basis, share insights about the industry, get their advice. I mean, I think that's that's a very useful thing if you can do that. Building a personal rapport with the investors, because even if they don't invest in your company, they might introduce other investors who might invest. They
Kudos to
might
you.
invest two
Yeah.
years later, right?
Yeah.
So it's not. I think it's actually a very good point, Ronak, a very good question you asked, because um, you do not. I mean, founders, mostly the founders who are successful, don't see things as very transactional, right? They take a very long-term view, and that pays them eventually. So
Got you. Thank you. Sure, we have one last question from my side, and then I think we'll open it up for the audience to ask you any questions. I think we have a few questions from them as well already, but I'll ask that post this. Um, so yeah, okay, finally, why don't you tell us about some of the common mistakes and take your time on this? I'm sure you've seen a lot of them. Make during their pitch presentations, and if possible, can you share any anecdotes about pitches that have gone wrong and the lessons learned? Any of your portfolio
I
companies, any
mean,
company you did invest in, anything that's stuck with you in terms of, this is
sure.
something that I want to share with the startups that I'm engaging with, that this is something which is definitely like a red flag. Don't do this. So
Sure.
something
I
to
mean,
avoid.
yeah, a lot of mistakes, of course, and it's quite common, and people learn and move on. But I can offer you some examples, right?
Yes.
Um, Probably, one of the most common ones is the deck itself. The deck which startups use to present. Um,
Hmm.
you need to understand the difference between a reading deck and a presenting deck. A reading deck is very word heavy, right?
Yeah.
Which you send over and people can get into the details, right?
Yeah.
Um, and a presenting deck is more, key messages, graphs, pictures, and you talk to them. So
Hmm.
one of the most common mistakes is mixing the two, sending a reading deck or presenting a reading deck where I, as the audience, I'm just looking and like trying to read right what's written rather than hear. So you want them to hear rather than focus on the screen. So that's one. Second
That's very interesting.
is
Yeah.
the definition of the first pitch. The first pitch is not where you tell your whole life story, company story, and try to cram everything in the 60 minutes, right?
Got you.
And this is again to the point that it's not a monologue, right? You cover off the key things and know that the purpose of the first pitch is to get to the next conversation. Not No one's gonna after the first pitch be like, okay, we're investing. Rarely, right? Be like, we're investing now. So
Right.
the key messaging points, keep it high level, and of course answer questions. Um, but keep it keep it a flowing conversation, and don't try to like fill in all that 60 minutes with information. If you miss out on something, that's okay, don't worry about it, right?
Got
So that's two. That's the second common mistake. um, yeah, I mean, what else?
any
We
example, anything,
can,
any funny incident in the past that
well, I
that
mean,
still stuck with you, you
yeah, I mean,
remember?
without of course naming any names,
Okay. Yeah. Yeah.
which is not good. um, is just being, I guess, very direct with the answers. Not
Mm.
is the other person you're talking on. I mean, the person on the other side has been through a lot of pitches, right? They understand when someone's being upfront and when someone's not being upfront. So answering questions very directly, and if you say don't know the answer, say you'll get back. But and do not. And most basic thing is, do not inflate your figures. Do not, put out inaccurate statements, because it will be verified. It will be verified. The community is massive, but it's also very small, right? Um,
I know what you mean. Got it. Yeah.
Don't think you can pull a fast one on anyone and survive in this community. So,
Got it. So don't underestimate the person across the table. Basically, they know. I
yes,
mean, they've been through this journey and they've seen what you're trying to show them multiple times. Understood. Um, yeah, I think yeah. So examples, I did ask you that. So well, yeah, I guess that was about it from my side. Yeah. Correct. Shora, thanks. I think this was super insightful, and I'm sure that everyone online has benefited from it in one way or another. Thank you for doing this, and we hope to engage with you more often from now on. I'll take some time, Shora, just the last couple of questions that we have from the audience. Um,
of
Mohammed
course.
asks, what is the presentation shed an idea? Can you hear me fine?
Yeah, I can hear you. I'm just
Okay.
noting down the question.
Got it. So the first question is, what if the presentation shared and the idea, if it's taken up by another firm, an individual, is in lost ground? So I'm guessing the person is talking about some copyright infringement.
Sorry, I don't understand the question. Would you
I
be
think
able
the
to
person
repeat
is
it?
talking about some copyright infringement. What if somebody presents your idea before you of sorts, or something which is too similar? What I mean,
Well, I mean,
any
is
sort
it
of
a copyrightable? Yeah, it's copyright is very hard to do on an idea, right? So I
yeah,
don't know how
that's
you
yeah. From
copyright
what
an
I do
idea.
understand, if
Yeah.
we can do one thing, maybe we can come back to this question if
Well, I
Mohammed,
mean,
if you
I'll
can.
tell Mohammed just a quick response if I, if I can understand is if, the way I'm understanding his question, right? No
Yeah,
one can copyright the founder, right? That's why it is so important. Back to my point, is to demonstrate your ability, whether it's from an execution standpoint, strategy standpoint. Um, you can't copy the founder's experience and the founder's passion. You can copy the idea, but who's going to execute, right? Uh, so I think that's a very important point to remember.
got it. Thanks, Mohammed. I hope that answers your question. If not, if you want to quickly, I mean, paraphrase and share exactly what you were asking, we'd be happy to ask Shaurya. Shaurya, moving on, Ashok says thanks. He has two questions. First, for early stage startups, their pitch may disclose their unique APP or product idea when presenting to multiple investors. How can this be protected? Again, on a
Yeah,
legal
well, I
stand.
mean, sure. I think there are a few mitigations here to take, right? One is don't go out to every investor. It is, focus in on your high value investors first. And say if you have a potential investor universe of 70, 80 investors, right? Out of that, start tiering the investors in terms of who are these investors who are going to go out. Don't send 80 decks out together, right? Focus on tier ones or your most wanted ones. Have those conversations and then move on. So don't spread out your deck to the market uh, just all at once. That's one. Second is there are a lot of tools out there which all of us use now, like DocSend, Ansarada to uh, protect your pitch decks. Uh, there will always be some leakages, but you can take measures to protect. Um, you can assume that if you send a deck, it will potentially be seen, but at the same time, if it's trustworthy, if it's a well-reputed VC, they probably will not share. So again, go gradually, do not spread out, and take take some mitigations. Right?
So no, fair enough. So my follow up to that. So you're basically suggesting that, I mean, like, I would like to assume, like, let's say somebody's at an ideation or a validation stage where a startup sort of has made their first deck and he's looking to raise money. I mean, that's typically the audience that Startup India sort of even caters to. As an entrepreneur, I should not be sort of hurrying myself into making sure that if I get my hands on a list with about 200 or 500 investors, I shouldn't use sort of a mail merge tool or something to broadcast it to everyone. I should
Yeah,
definitely
no,
not.
no, not at all. I mean, I think that's the last thing you should do.
Yeah.
So it goes like this, right? In terms of you build out your list,
Mm.
You tier the list in terms of your most wanted, high likelihood, who you want on your cap table. Then within
Yeah.
that, always if you can get a warm introduction, is better. Cold emails are the last resort. When sometimes I do understand that not every founder can do a get a warm introduction. But to the extent that you can do that first, and only as a last resort send out any cold emails or LinkedIn messages, right?
Yeah.
And definitely don't send out broadcast decks. That is going to be very detrimental to your startup, like, eventually. So absolutely, like, I mean, you might get lucky, but this is not the recommended path.
I hope everybody on call has noted that. I have seen that many a times. I do completely agree with what you said. But yeah, thanks for that too. Sure. I don't know. I mean, if there is a way for you to answer this, I'm not sure if I understand myself. But there's a question by Jeet who asks, Shaurya, can you give us an example of an elevator pitch
Give us an example of
of an elevator pitch? No, even yeah, even I don't understand exactly what he means, but I guess he's saying what is an elevator pitch? If you had to maybe in layman terms explain like quickly
Yeah, I
what
mean, the elevator pitch, if you had like 20 seconds right, to sell your startup, what would you do from the 0 to 20 seconds?
perfect.
I mean, very
Hmm.
literally, if you're in an elevator and you have
How
15
do you build?
seconds,
Hmm.
what would you say? So they, get out the elevator with you and say, okay, tell me more, right? Yeah, I mean, don't know
No,
how else to find an elevator
no, no,
pitch.
no, perfect. I think that made sense. I'm gonna use that, but thanks. Last question. I think we have two more, but quickly, Shaurya. Unique proposition for pitch deck, whether it should be about products, business model, customer service, operations, or market. This is Mr.
Like
Rakesh who asked this.
unique,
I'm
what is
guessing
the
it says what is the unique proposition for pitch decks, whether it should be about products, whether it should be about a business model, whether it should be about their customer service, operations of the company, or the addressable market.
um yeah, I mean, it's tough to choose. I mean, again, I would say it should be the founding team, or I mean, if I had to give ranks, it's probably the founding team. Second is the business model. I think addressable market is a lot of people emphasize on addressable market, but and you get decks with say my TAM is, or the total addressable market is 50 billion. But you don't need it to be 50 billion, right? Even if it's like 500 million and you can show you'll get a 20% share, you're good. Right? So I think
Yeah.
TAM. I don't. I mean, I'll answer the question in a different way. Do not. I
No,
mean,
please do.
know about your market, but do not focus on the addressable market so much, right? I mean, it has to exist, but it doesn't have to be a 50 billion market. Founding team, the business model, including how you're going to make money, right? I mean, I think these things are should be prioritized.
Right. No, I think that's a very valid point, and especially in a country like ours where, numbers play a big role, and everybody thinks that a lot of people, sorry, think that 1.4 billion is the total addressable market for most of the startups that are coming up, and there's a feeling that about a billion of them is the market that their startup will be addressing. So I think that I totally agree with the fact that that should not be the primary focus for them during their pitch. So yeah.
Yeah.
For a last question for the day, this is by Shanaz, who says, not every investor is a good fit for a startup, and not every startup is a good fit for every investor. But how do early stage startups figure who to really approach? I think you did sort of answer this through the tiering approach and how one should go about it.
And it's
But
doing the
if you want,
homework, right? Like we said, understand what the VCs are about, what these investors are about, what are they talking about, what is their focus. And I mean, as an early stage founder, also don't want to exaggerate this, right? I mean, do not put so much pressure on yourself that you don't, go out, or are not, going wide enough. I know sometimes it's a contradictory. It sounds contradictory. Sometimes it's your first round, you just raise capital for the pure sake of getting money, right? It doesn't have to
yeah,
be fit instantly. Um, so in a scenario where like you raise no capital versus some capital, so you can continue on with your business, and then eventually in your following rounds find a suitable investor who can help you grow. That's fine, right? So
Got it. No. Shanaz, I hope that answers your question. I think that is about it from our side, Shora. Once again, thank you for doing this with us. I hope we can
awesome. Thanks so
engage
much,
once
Shaurya.
again. No, of course, absolutely. Love doing this formal chat with you. I think, yes. Cool. Shora, nothing else from our side. Anything else you'd like to share with us? Anything, I mean,
Well, that's it.
you want to
Best of
share with
luck
the
to you
people
and
on the
your
call?
team. Please
Thank you.
continue to keep doing the good work that you guys do. You're making the Indian ecosystem proud. So best of luck.
And investment for people like you.
Absolutely.
Yes. Cheers, man. Thank you so much. See you super
Thanks,
soon.
Rana.
Take care. Bye bye.